Welcome back, and you're watching Market Fatafat on ET. Now let's keep it going with all the stocks that are buzzing in trade. And now on the technicals, we're joined by Rajesh Palviya, joining in with us this afternoon. Rajesh, a very good afternoon to you. And let me just start and talk about firstly in terms of your first stock, that is the heavyweight Reliance. What are you liking in this stock today? Obviously, it's doing quite well, and it's among the top gainers of Nifty 50 as well.
Yeah, good afternoon. So post-earning, Reliance is now picking up the prices, and looking at the overall setup, we believe that, as the stock is holding above 2350, 2360 level, then possibly stock can, continue its upward momentum, and we are expecting target of around 2460 to 2480 in the continuation of this uptrend. Even if you look at the near-term, short-term setup, stock is now trading above its 50-day moving average, approaching towards its 100-day moving average. The kind of rollover activity we have witnessed for this series, we are hopeful that this rally can continue further higher from the current level. So one can hold long position with stop loss of 2360 and upside target is 2460 to 2480.
All right, moving on. Harsh, Kotak, there you go. We got a banking name featuring in your list. Look at you, how proud you are of that. Why is this one in focus?
Well, it's in focus because Snehi's purposely put this stock right up here. But let me quickly move to what we can expect from Kotak's earnings. So we're seeing net interest income, which is expected to go up 33% year on year. A solid set with regard to NII, 4% sequential uptick as well. Margins will continue to expand. That's the expectation. We're expecting operating profit though to go up just 1.5% sequentially, and that's on the back of the fact that OPEX will continue to be elevated for the bank. That's the expectation. Provisions will continue to be quite subdued, 180 crore odd, and we're expecting a PAT growth of around 8% on a year-on-year basis, around 4% up sequentially, around 2900 crore is where we're expecting standalone PAT. Both sides of the balance sheet expected to grow quite steadily, around 20% growth in advances, around 15% growth in deposits. Of course, the deposit franchise of Kotak continues to be quite solid, and that will continue to get tested in this particular quarter. One piece is that we're expecting a largely steady set from Kotak. Really no major moves with regard to year-on-year growth that we saw from some of the other banking counters, but a steady set is nonetheless a big positive for Kotak.
I want to talk about the next one, and that is ACC. This one is in focus. Why? Because CLS has actually downgraded this stock to an underperform from a previous outperform rating that they had for the company as well. Now what they are highlighting is, as in terms of the numbers for the company, they were below the estimates on lower realizations. We saw the revenues and EBITDAs being impacted as well. While volumes, yes, saw a bit of an uptick over there of 9%. Power and fuel costs were sharply lower, and lower clean fuel cost also is something that what they were watching out for. Other than that, yes, they have downgraded the stock to an underperform from outperform. Target price also reduced to 1,875 rupees from previously 2,200 rupees, and they forecast a slower uptick in terms of profitability. The valuations are cheap, so that is what they're finding interesting. But re-rating will likely hinge on the synergies and capacity expansion and outlook of the price increase as well. Stock has surely recovered from the day's lowest point as of now, Shriram, when you're looking at it, and it's standing with gains of 0.8%.
All right, let me put my producer Snehi in spot by talking about the stocks that are flashing on the bottom of your screen. Firstly, let me talk about Orient Cement. That one has come up with the numbers. If you look at on a quarter-on-quarter basis, still a set of numbers coming in for Orient Cement. If you look at the profits coming in at around 67.4 crore rupees, which is higher compared to it on a quarter-on-quarter basis. As you can see on your screen, the margins have come in at around 15.9% versus 12.3% for Orient Cement. However, the stock did see that dip coming in because on the year-on-year basis, maybe there is a sort of a blip on this one. But let's move on and let's talk about Atul Limited. That one also has come out with his numbers, Vinny, and Atul Limited, if you look at the PAT, it is coming at around 92.2 crore rupees versus 136 crore rupees on a year-on-year basis. The revenue is also coming lower on a year-on-year basis, and there you go. Atul Limited is definitely reflecting that.
Absolutely, Cheryl, and let's not forget RIL Chemicals. That's flashing on the ticker as well, and we're seeing a downtick coming in on the stock as well. Post its numbers. Revenues have come in at 587 crores versus 572 crores, almost flattish on a year-on-year basis. But what we're seeing in terms of the profits of the company, they have come in at 64 crores versus 29.7 crores. We will wait out for more numbers in terms of the margins over there as well, because I think that will be a factor that is important for the companies as well. And costing pressure actually comes in terms of the margins of the company. But as of now, the stock has clearly shown a downtick coming in there as well.
Yes, absolutely. So these are the numbers that have just come out, and Atul, all of them in fact are declining post their numbers. But let's talk about one stock that will be on everyone's radar, and it is on everyone's radar, and that is Wipro. If you look at the guidance, it actually suggests a sequential guidance of around -3% to -1% in constant currency terms versus the expectation of -1% to +1%. If you look at the Q4, the constant currency decline was at around 0.6%. This was also much more than what was expected. The company has approved a buyback of up to 12,000 crore rupees at a price of around 445 rupees per share. This is much higher than what the street was anticipating. If you look at the operating margins, it came in at around 16.3%, which was in line with the estimates. The attrition levels have declined for the second consecutive quarter coming in for the company. But like I said, the street is definitely giving it a miss, or rather ignoring the weak set of numbers coming in from these tech majors, and Wipro is among the top gainers on the Nifty today, 2.9% uptick coming in for this one.
But Cheryl, let's not forget that buyback is something that is keeping the street.
Given the fact that the price is higher than what was expected.
So that is why the thumbs up is coming in there as well. But let's move on. And Tata Consumers, Rajesh, you've picked out this stock for us. When you look at it, obviously the numbers were reported this week, but we're seeing a good uptick in the stock today as well as during the week as well. What are the charts indicating for Tata Consumers now?
So very strong buying action throughout the week. Stock almost gained around 9% for this week, and looking at the overall setup, stock has taken the support from its multiple support zone area of 700, and looking at the daily setup, stock is now very well placed above its 50-day 100-day moving average. Throughout the series, we have seen strong buying action, and we believe that the kind of breakout which we are seeing on the daily as well as on the weekly chart, we believe that this stock can continue furthermore upside from the current level. And looking at the setup, we are projecting target of around 800 to 820 in the continuation of this uptrend which we are seeing. One can keep a stop loss of 735 to go long in Tata Consumer.
All right, moving on then. Lisa, let's talk about Indian Hotels. This one also came out with its numbers yesterday post-market hours.
Numbers, the revenue from operations was up 86% on year-on-year basis, and that was because of high demand and also increase in the rates of the room. So the company also reported a net profit of around 1,000 crore versus a loss previous year, and the company has crossed a milestone of crossing this 1,000 crore for the first time. But its margin, that's a pressure on sequential basis. It was 33% versus 35% earlier. And the management said that the G20 as well as Cricket World Cup, that will drive demand in the coming months. So their free cash flow is also up 3.5% from pre-COVID levels at 1,000 crore. But on the back of margin pressure, the stock is seeing some selling pressure, and it also saw some strong flow in the last 5 days. It had a run up, but it's more about profit booking in today's session.
Around that one. But Harsh, coming to you for stock number 20, you picked out Ratan India today. What is the news for you?
D2C brand, which of course helps them venture more into the retail space. So definitely a positive on that particular counter. You can see that. Now, giving you details of that, it's a fashion wear brand called FYLTR. And what they're also suggesting as part of their disclosure is that the brand new line is going to be of solid colored casual clothing. That's what they're going to currently focus on, and it's obviously going to be available even on Amazon. So you have your e-com channels as well, but it's going to be a D2C product as well. So on the back of that, you can see the stock up 1% positive on that front.
All right, moving on, Rajesh, TVs Motor. Why is this one, or rather, how is this one looking on the charts to you?
So overall long-term setup for TVS Motor is bullish. Since last couple of weeks, we have seen a minor dip in the stock, but in this corrective move, stock has taken the support exactly from its 50-day moving average. Looking at the momentum in most of the automobile stock, especially in two-wheeler space, we believe that TVS Motor is also started recovering from its recent low, and it's a kind of reversal, we can say, in the near-term setup. So looking at the overall long-term as well as the medium-term setup, we believe that TVS Motor can scale up further higher, and there is a high possibility that again stock can inch up towards its all-time high trajectory again. And looking at the near-term setup, we believe that the immediate target for the stock could be around 1200 to 1230. One can buy these stocks and accumulate in the minor dips also, with stop loss of 1070.
Okay, let's move on and talk about the next stock, and we're going to be talking about GAIL. Now, this stock is in focus. Why? Because Nordis Bank has actually said that they've excluded two oil and gas companies from their 1.4 trillion wealth fund. This is the world's largest, citing the ethical concerns over the ties with Myanmar military. Now, in these two companies, GAIL is one of them as well. The other is a South Korean state-run company. So because of this, we're seeing some pressure coming in on GAIL, because what the fund also mentioned, that the two were excluded mainly due to an unacceptable risk that the companies contribute to serious violation of individuals' rights in the situation of a war conflict. On the back of that, we're seeing GAIL is under pressure. Recovered from the day's lowest point, but yes, still down 2.24%.
All right, moving on. RBL Bank, Rajesh, this one did hit a rough patch last year, mid last year. But RBL Bank has been trying to come out from those pressures and did try to make a good comeback as well. Do you think that this year will be a standout year for this particular candidate? And if you are wanting to bet on this one, now is the time?
So most of the banking stocks have recovered, and banking and financial have done well in the recent past. And looking at the overall setup for most of the banking stocks, we believe that this space can continue further more upside momentum in coming weeks also. Looking at the setup for RBL Bank, yes, stock has managed to give breakout on the weekly chart. Almost for this week, stock has registered almost 10% kind of gain during this week. Stock managed to give breakout of its falling trend line on the weekly chart. This breakout indicates that this momentum can continue further, and on the higher side, the stock can rally towards 185 to 190 in this breakout. So one can buy this stock also with stop loss of 146, and upside target is 185 to 190.
All right, moving on, let's talk about another earnings candidate, CSB Bank. Reported his number a short while ago, and if you look at the NII, it's coming higher by about 14.7% on a year-on-year basis, coming in at around 349 crore rupees as against 304 crore rupees. If you look at the PAT, it's coming higher by about 19.6% at around 156 crore rupees. The operating profit also has seen a good growth coming at around 42.1%. If you look at the provisions, they were lower by about 40% on a quarter-on-quarter basis. We need to find out more what exactly has spooked the streets when it comes to CSB Bank, because if you look at the profit, the asset quality, all of them are standing out, but the stock is under immense pressure. 5.7% downtick coming in for CSB Bank as we speak on back of this numbers, or post this numbers rather.
Let's move on and talk about Oberoi Realty on the charts. Rajesh, last year, somewhere in September, we saw that the stock actually managed to go above the 1,000 mark. But since then, again, it's just been falling in trade, and nothing exciting has happened only till the last month. Then you check it, look at the stock and the charts. You see a slight bit of an uptick coming in there. Is this finally an indication that there is a turnaround coming in for this one, and should we look at buying the stock?
So overall long-term setup for Oberoi is on the bullish side. Since last 3-4 months, the stock is consolidating in very tight range. Looking at the near-term setup, the stock has started recovery from its 50-day moving average. It's a fourth consecutive day where the stock is forming higher high-low formation, which is suggesting that sustained buying is happening in the stock. And now stock is trading above its 200-day moving average. The kind of recovery which we have seen on the near-term chart, we believe that in this process stock can continue its upward momentum and can give a breakout on the weekly charts. On the breakout about 935, 940, stock can really further higher towards 1000, 1040 level also in the continuation of this up move. So we are bullish at this moment, and we are recommending here to buy this stock with stop loss of 890.
Before we actually move on to the next stock, let's take a note of what the markets are doing at this point in time. Only a few points left for that 18,000 mark, which will be the first time since February if the markets tend to scale it today. That's Nifty in particular. Right now, Nifty is trading at around 17,982 levels, heading towards that 18,000 mark anytime soon, Vinny.
Absolutely. We'll be keeping an eye out on that. And let's move on. And Lisa, coming to you for the next stock, and Trent in focus on the back of its numbers as well.
Reported a mixed operational performance. The revenue was up 64% on year-on-year basis. Even the EBITDA was up around 50%. Net profit also saw 45 crore versus a loss of around 21 crore. But they saw some pressure on margin, which was at 9.3% versus 10.1% last year. In addition to that, they recorded one of the lowest gross margin at around 40.8%, and this is because of their increasing share in Zudio format. So, and the management also highlighted a challenging demand environment. So, all in all, the margin missed expectation, and that was owing to an adverse product mix, higher discounting, and also increase in their other expenses. So, as we can see, the stock is down 2% in today's trading session.
Moving on, Rajesh, Hind Copper is the counter that you're tracking for us. Given the fact that it is from the metals pack, a lot depends upon how globally the commodity market moves, and it does impact Hind Copper's movement as well. Bro, on the charts for now, how does the charts look to you? Where the future lies for this one?
So most of the metal stocks are consolidating in very tight range, and the same kind of behavior we are witnessing in the Hind Copper also. So stock is now recovering from its oversold trajectory. Looking at the near-term setup, now stock is trading above its 50-day moving average. The kind of consolidation which we have witnessed in the weekly chart and the breakout on the daily chart is suggesting that this stock can move further higher from the current level. 110 to 112 could be the possible target in the near term to short term. So one can buy this stock as the risk reward is in favor, as the stock is almost trading near to its consolidation range of lower band of consolidation range. So we are recommending here to buy this stock with stop loss of 98. Upside target could be 110 to 112.
Okay, let's move on and talk about Shriram Finance. And Harsh, how are the numbers looking like for this one?
Really, Vinny. So we're looking at the numbers sequentially for the sake of comparison, correct comparison, in fact, because of the merger that's happened. NII has come in at 4,445 crore versus 4,427 crore on a quarter-on-quarter basis. That's a mere 0.5% increase. Operating profit has taken a big knock. It's down to 3,080 crore versus the 3,300 crore in Q3. So clearly lower by around 7%. We're seeing PAT, which is therefore also lower at 1,308 crore versus the 1,777 crore number that it clocked Q3 of FY23. That's a almost 25% plus decline, and that's also on the back of certain loan loss provisions which Shriram Finance have made. Loan loss provisions have come in at nearly 1,200 crore for this quarter versus the 900 crore number in Q3. So we're seeing a bit of pressure on the back of all of that. While growth doesn't seem to be a problem, but some of the operational numbers don't seem to be extremely healthy when compared QOQ, and therefore the stock is taking a bit of a hit, down 5%.
All right, that's Shriram Finance for you. But let's talk about Tata Metallics. This one also came out with this number short while ago. Firstly, the company recommended a dividend of about 5 rupees per share. But if you look at the numbers, 926 crore rupees is where the revenue from operations stood at versus 808 crore rupees on a year-on-year basis. The PAT came in at around 55.6 crore rupees versus 52.5 crore rupees on a year-on-year basis. The stock did see a spike post its earnings. For now, it's fizzled off some of it or given up some of it. Now it's trading with gains of about 0.8% as we speak, and that is Tata Metallics for you.
Let's move on to stock number 30, and Rajesh, on the charts, Intellect Design. How is this one looking?
Rollover action was very attractive, and looking at the overall setup, stock is after a strong corrective move. Now stock is consolidating since last 4-5 months at the lower band, and in this current month, stock has also gained almost 9% kind of price. So looking at the rollover action, looking at the breakout on the near-term chart, we believe that that stock has formed a bottom at the lower level, and now stock can start recovery from the current level. So looking at near term as well as the short term setup, we are bullish, and we are expecting target of 465, 470. One can buy this stock with stop loss of 435.
On and talk about ONGC then, and actually all the oil explorers, they are in focus. Every time we see crude prices fall, they come into focus. Why? Because crude prices lower means lower earnings for these oil explorers. Now with windfall taxes, realization drop further, what actually happens is generally every $5 drop in Brent crude oil prices would impact the EPS for ONGC and Oil India by 7% and 12% respectively. So because of that, we do see an impact coming in on ONGC as well. The stock has recovered from the day's lowest point, but as of now also trading with declines of 0.5% for ONGC and 7-10% decline for Oil India.
All right, moving on, let's talk about CATE then. And this particular counter saw a huge jump in today's trading session. At one point in time, if you look at the stock price, it was trading higher by about 6%, and this sort of an uptick. Oh, now it surpassed that level also. Now it's trading higher by about 9.8%. The up move in the stock has come in post a huge block deal took place. About 2.9 lakh shares traded in 2 block deals at a price range between 1,420 to 1,421 rupees per share. And from there on, you can see the stock is surging in trade, 9.8% uptick coming in for CATE as we speak right now, Vinny.
Absolutely. Let's move on then to the next stock, and that is Can Fin Home. Rajesh, what are the targets that we should be keeping an eye out for this one?
So very strong buying action throughout the month for Can Fin Home, and almost stocks has gained around 17% for this month. Looking at the breakout on the monthly chart, stock has formed a contracting triangular formation on the monthly chart, and breakout is already done. So breakout is suggesting that this stock can continue further more upward momentum towards 700 to 720. One can buy this stock with stop loss of 585. Upside target, as I mentioned, 700 to 720.
All right, so that's the take coming in on Can Fin Homes, and that was indeed the last stock on this edition of Market Fatafat. Thank you so much, Rajesh, Amar, Lisa, as well as Harsh for joining us on the show. And it's a wrap on this edition of Market Fatafat, or rather this week's edition of Market Fatafat. So it's a goodbye for Vinny, myself, and our producer Snehi, and our director